Greetings and welcome to RISI Fastmarkets' next virtual webinar. I'm Director Chris Lyddan in the Timber Group. We'll be led today by Dustin Jalbert, Senior Economist in the Wood Products Unit. We're here today to discuss RISI Fastmarkets' new study, the outlook for U.S. offshore lumber imports, which is led by Dustin. He'll start off with the latest comments on the all-important North American market and then move into the new study. Regarding ground rules and housekeeping, we have a 30-minute meeting target. I'll do my best to keep us on track and on time. For those questions not gotten to, we'll make every effort to respond to you over the next several days. The question format will be embedded into the bottom tray of the web. So you'll see a Q&A feature there. We'll hold Q&A till the end. And when moving on to the recording availability, that will be sent to you by email when that's available. So starting with recent market developments, Dustin will discuss some of those domestic market trends. Obviously, unprecedented uncertainty looms over wood products. Dustin, what are you seeing on the demand side in recent weeks?
Yeah, thanks, Chris. So a pleasure to be speaking to everyone today. Obviously, it's been a pretty tumultuous sort of few weeks here for wood markets. I think it's safe to say that April was a pretty tough month overall, just looking at what the impact of COVID-19 has been, especially with all the sort of the interventions that have come about to try to prevent the spread of the virus. Obviously, housing starts in April took a pretty big dive. I think that was pretty indicative of sort of the weak market conditions, down 30%, below sort of 900,000 starts at a seasonally adjusted rate. So when you consider new construction is around a third of lumber demand, that's a big hit, obviously, for the month. A lot of weakness as well in industrial markets, commercial markets. So really sort of challenging environment given sort of the impact of COVID-19. I do think, though, looking at sort of some of the recent data, looking at what we've seen in May so far, definitely some sort of green shoots, some reasons for optimism. When we look at sort of, for example, the home builder confidence index, that has sort of rebounded off the bottoms here. You see in this chart in sort of the line in orange here. So starting to sort of indicate, housing probably going to have a little bit more of a rebound here. We probably bottomed out in April. Purchase application data, looking at the demand side for actually home buyers has been really bounced back very strong off the deep dive that we saw in April. Levels are kind of back towards, purchase application levels we've seen close to sort of pre-COVID-19's impact. Some real estate markets are up year over year. So between that, looking at the personal income report from the Bureau of Economic Analysis as well, despite sort of the drop in spending, the savings rate jumped to sort of a record high of, I think, a little over 30%. So people have cash in their pockets, despite all the disruptions and the job loss. So definitely some, at least near-term sort of tailwinds for the economy as we bounce back here. Still a lot of questions to be answered. Another bright spot that we've seen, and we just wrote a viewpoint on this subject, was actually in the sort of the remodeling side of the market, specifically sort of the do-it-yourself side. There's just been really, really strong demand for, in terms of sales of treated lumber, studs, appearance grade boards, fencing, a lot of those items that really over-index to, say, your big box store, right? So that's been really, really strong if you've been following sort of the Random Lengths sort of prices, the prices for a lot of those commodities. We look at the retail sales data, as a sort of proxy here. Total retail sales in the U.S. fell by over 20% in April. But when you compare that, so it's a record drop. But when you look at sort of sales in home and garden centers, as well as sort of building material supply stores, actually that that's a proxy for sort of repair and remodeling to some degree. That actually was up slightly year over year in April, right in the depths of sort of COVID-19's impact. So a really a lot of sort of robust sort of spending activity in that space. And that's really kind of been holding up the demand side, maybe a little bit surprising to the upside for lumber. And what's driving that? Some of that is, a lot of these stores remained essential businesses that were open during a lot of sort of the shutdown in April and early May for a lot of sort of markets. People have a lot of cash in their pockets right now, and despite the high unemployment between the federal stimulus through the CARES Act, you look at all the freed up disposable income, people aren't traveling, people aren't going to bars and restaurants, and they're taking their extra free time if they're not commuting to work or they've been furloughed, and they're improving their personal space, the place that they're hanging out right now, and they have to spend their time. And that's been really strong for that, that segment of the market. We wrote a viewpoint on this recently, and one of the things that we kind of tried to look at to sort of quantify the volumes for lumber demand that's coming through. So what we did was we did a Google search for some common search phrases that would be sort of indicative of, sort of do-it-yourself projects that would use a lot of lumber or potentially use a decent amount of lumber. And when you search for, build a porch, build a deck, build a fence, you're seeing searches in April and May really spiking to levels not really seen before. So it's really, we thought this is sort of an interesting trend, and it really is sort of further evidence that this is a very real development in the market on the demand side. So, I would encourage people to check out that viewpoint if they're interested on that subject a little bit more. But yeah, so demand side challenged, but some sort of positive things that we've seen recently, Chris.
Good. And as follow-up, Dustin, just a couple of comments on the relative shares between new housing starts and R&R, where this, how that R&R volume plays out compared to the whole.
Yeah. I mean, R&R is actually sort of the bigger sort of end use in the U.S. for lumber demand. You're talking around 40% of lumber comes from demand comes from that R&R space. New construction is around a little bit less than that, sort of around 1/3 of demand. So both those are very impactful. Obviously, we talk a lot about new construction because that's sort of the kind of sexy topic. But R&R is very impactful, and this do-it-yourself segment is clearly having some impact on the demand side.
Good. No doubt, supply has reacted to the drop in demand for lumber, bringing with it new levels of volatility. How are curtailments impacting markets?
Yeah, I mean, the curtailments that we've seen in the market recently have been incredibly, impactful, right? I mean, it's really contributed to a lot of the volatility that we've seen recently. Really, it's difficult to pin down the exact amount of volume that's been pulled out of the market. When we tally up what's been announced for temporary curtailments, between what's been actual volume that's been sort of been stated and volume that can be estimated, you're talking probably a little over 1 billion board feet that's been sort of announced curtailed between the end of March and early May. That though doesn't really account for, there's a lot of volume that's going under the radar between shift cuts and trimmed work weeks. We think around 30% of the market curtailed in April. I've seen estimates higher than that. I've seen estimates lower, but it's certainly a substantial amount of the market that's sort of been cut here. When you consider that, monthly sort of capacity for the industry in North America is around 6 billion board feet, a month. That's a sizable amount of volume that had to be taken out of the market. And, it does seem like the supply side has sort of overshot the drop in demand, and hence sort of this real sort of sharp reaction you've seen on the price side, and sort of buyers coming back to the market in a real aggressive way here in recent weeks. Again, some of that reflects maybe some of the overperformance on the R&R side, and also maybe even new construction sort of already starting to bounce back here. We do think that near term, there's still going to need to be curtailments in the market just because demand is still going to be fairly suppressed, even with some of the tailwinds or some of the rebound that we're seeing here and some of the positive signs. certainly probably not, curtailing at the 30% level that we think happened in April, but you're going to still see, the capacity side managed as demand is choppy and uncertain. And then last, I'll just mention, permanent curtailments. There's obviously been some sort of detrimental sort of impact to mills on a longer term basis. I won't go through all of these, but the real sort of permanent closure that we've seen is Canfor's sort of Isle Pierre mill in BC. That is kind of continuing this long, medium to longer term trend of sort of closures in the BC interior. So it's, demand continues to be suppressed. We may see more of these sort of long term sort of impacts going forward.
Good. And further on the curtailments, Dustin, looking at those trends, with capacity continuing to come out in Western North America, BC, and in the US Northwest, how and where is that volume being filled? And relatedly, I think this is key, how does Southern Pine play into the unfolding story around substitution between species?
Yeah, certainly. I mean, obviously, longer term, there's definitely some constraints, in terms of capacity growth and production being somewhat encumbered, say in the Western markets, whether you're talking about British Columbia or the Pacific Northwest, for varying reasons there, but very unlikely that you're going to see capacity or production growing there. And obviously, in BC, the interior in particular probably declines for the next few years. While demand is certainly challenged in the near term with the impact of COVID-19, longer term, there's certainly going to be, demand is going to rise, especially when you look at sort of fundamentals for shelter and sort of demographics in the U.S. So it probably points to, the demand, picture going up. So if more volume's coming up and, some of the supply is, can't really grow from a lumber perspective, Southern Pine is certainly going to fill the void. You're seeing it, obviously truss manufacturers, treaters, love this stuff. You're seeing a lot of substitution in MSR where SPF has a big presence, but obviously volumes continue to decline. And so, someone needs to fill the void. So pine, and especially a lot of applications that require sort of narrow lumber, I think, end users are using it more and more readily. And I would just add too, it'll be interesting. Our colleagues at Random Lengths are actually releasing a substitution sort of survey in the next few weeks. And I think, the market will find that very interesting to see what the results are and how that's, where the shifts are happening as the sort of volume changes and those capacity changes happen in the market.
Good. And yes, I think we're all anticipating that Random Lengths study on substitution. So then moving on over to the import study, the supply of lumber certainly is restructuring with more permanent curtailments in Western North America, but another key area that's causing reactions involved a significant rise of non-Canadian imports into the US. Dustin's put together the new study. It's named The Outlook for U.S. Offshore Lumber Imports. Dustin, what do you see through this rising trend, especially coming out of Europe?
Yeah, certainly. I mean, it's been a very interesting topic to sort of cover over the last year or so. Before we kind of jump into the trends that, recent trends in offshore imports, I think it's important to acknowledge that really a big driver for putting this together, really doing this deep dive, was really driven by, folks in the market really sort of speaking out and saying, hey, we need a better understanding of this, these trends in the market, so market participants and clients. So it's really one of the more popular sort of questions outside of the bread and butter sort of demand, supply, pricing analysis that we, forecasting that we do. So that is really kind of what is driving this, this research here. And it's really a culmination of a lot of existing sort of research that we've done in other sort of products. Our colleague like Peter Barron has done some research in this space too. And sort of pulling that together and building some new frameworks to think about, sort of competitiveness, particularly of European supply in the US market. So yeah, this slide here just to emphasize really the questions, the core questions we're trying to answer in this study. What factors have really contributed to this phenomenal rise in offshore imports in the US in recent years? So, really trying to quantify all that information, pulling together, trade data, pulling together, building models for cost models for the European market as well to compare that with our existing models in the US. And then looking in the future, what does the forecast look like for the future in the coming decade for offshore supply? So, when we kind of look at what the trends have been, just as an overview, we look at the major sources of imports to the U.S. Obviously, Canada is by far the largest source of supply. Canada accounts for around 27, 28% of U.S. consumption. 13 billion board feet in 2019, but that volume's been declining. As we just talked about, a lot of the capacity sort of curtailments that we're seeing in that market and will probably continue going forward means that we'll probably, the Canadian source of supply will continue to sort of lose share in the coming years on that. When we look at, other sources of supply or offshore supply, basically supply outside of Canada, we look at, there's definitely markets like Southeast Asia, Oceania that supply the U.S. market, but it's small volume. Latin America is a little bit larger, but a lot of that volume, like Southeast Asia and Oceania, is really not focused as much in structural applications for lumber. It's more sort of industrial applications, serving sort of the molding and millwork market to be further converted in the U.S. A little bit of a different animal than, say, what's coming in from offshore in Europe. A little bit more volume there. You're talking closer to 1 billion board feet in 2019. And I think the really important thing is that, growth has been phenomenal in offshore imports from Europe in recent years. So when you kind of break down the offshore component of imports to the U.S. Into those major regions that we've categorized, obviously, again, when you look at Latin America, Southeast Asia, Oceania, relatively flat, lower volume, but really the growth all the offshore growth has been accounted for by Europe, growing basically sixfold over a 5-year period. So you're talking, 40 to 50% growth a year. So very rapid. Obviously a little bit of a slowdown in 2019, but that's more reflective of the fact that U.S. demand really cooled down. So as opposed to sort of a fundamental change and slowdown in offshore imports. And if you look at the monthly data, things have really snapped back up when sort of demand was stronger earlier this year, pre-COVID-19. So, where a lot of that volume is coming from Europe specifically is really from Central European suppliers. So when you look at German imports, Austrian imports, even smaller countries like Romania and Czech Republic, that's really where a lot of the volume is coming into the U.S. market. Scandinavian suppliers too definitely have a presence, particularly from Sweden, but a lot of that growth is really coming from those Central European suppliers. And there's a number of reasons for that, but a big sort of reason is this sort of spruce beetle kill that is ongoing in Central Europe and is sort of piling up to the affected timber from this sort of ecological disaster that's sort of ongoing there. So this is creating sort of a surplus of timber that's available to the market to be converted. I mean, a lot of it is being shipped to Asia in the form of logs, but some of it is being converted into lumber or other high value added products like mass timber. And it's finding its way into the global markets, including the US market. And it's because of how sort of abundant and available timber is at the moment in Central Europe. This is something that we've modeled in the study, and we've gone through and built a European cost model. You look at delivered prices or delivered production costs for European suppliers. They're some of the cheapest sort of suppliers to the Gulf and Atlantic coast in the U.S., and especially those sort of coastal housing markets where there's a lot of lumber demand. So it's really been a disruptive impact on the market. And when you quantify, you look at the production cost and the relative returns to those mills. It's hard to see it not having an impact going forward in the future, and that's something we sort of forecast out and model in the study. Last slide, just to kind of emphasize some of this custom sort of data that we've put together to try to analyze the market. One thing that we tried to understand is where the lumber is actually landing in the U.S. And you can look at port data by value into sort of ports of entry into the U.S., but we really want to look at it on a volume basis. So we went through we looked at all the ports of entry. We tried to make an estimate on a volume basis, looking at unit import values and things like that to adjust down from the value level, and also and then sort of grouped, sort of filtered out, the sort of filtered out just to include sort of seaports of entry. So really kind of a proxy for offshore imports, not a perfect match, but you can see here that, this kind of confirms what we hear in the market, that a lot of the volume that we're seeing from offshore is really kind of entering these southern markets, the Gulf Coast, the Southeast, the Mid-Coast, these sort of large groupings that we've made for these seaports of entry. So, obviously there's been a big sort of jump in the southern share of sort of that's absorbing these offshore imports. And that's somewhat intuitive in the sense that, that's where the fastest growth in lumber demand is, where the housing market is growing the fastest, sort of the epicenter of demand in the U.S. So you're seeing very competitive sort of, delivery for these, particularly for these European producers supplying structural lumber to the market. But, the Western United States absorbs a fair amount of volume too. You're talking about, volume that comes more from Oceania, from Southeast Asia, probably from Latin America, less so obviously geographically from Europe. And the Northeastern United States absorbs a lot of volume too, particularly from Europe, where again, European suppliers land very competitively. So, and the last thing I'll say here, so, we can sort of pivot over to Q&A, is that, when we look at, what's happened historically. If you look at the volume in this chart here that we're showing, obviously, we've seen offshore imports rise dramatically in the past, particularly the peak of the housing market in 2005. So it's not the first time that we've seen this sort of incursion of volume coming into the market. So in some ways, this is somewhat of a repetition of, when we see demand sort of grow in the US and sort of conditions tighten, it does pull in offshore volume, particularly if, when prices are more attractive. And that's been a factor as well to, you look at sort of the mill returns for the European suppliers. So anyway, a lot of, I think, cool analysis that we've done here, sort of a confluence of a lot of different information that we've been collecting over time, some new models, and obviously sort of we forecast a lot of this data out over the next decade to really think about, what's the future for European sort of imports into the US market. So definitely encourage folks to reach out if they're interested. And I think with that, I'll pivot it back to Chris.
Thank you. To Q&A quickly, as we're keeping an eye on the clock. One question comes in, Dustin. Which ports, if you can identify, are getting bigger shares over others? That would imply some interesting local dynamics across the Southeast and Gulf U.S. So could you comment on relative port behaviors?
Yeah, I mean, basically, ports in, obviously, any of the ports that you're looking at in Texas, Port of Houston, Florida is a big, has a lot of major landing points as well. The Mid-Coast, obviously seeing, a lot of growth as well. So it's definitely something that we quantify in the study. We do look at port imports. We collect that and aggregate that. At that sort of level of specificity, we look at it on a dollar basis, just because, trying to get an actual volume estimate using, sort of techniques like controlling for unit import values and things like that gets a little bit tricky at that level. But, we do have that all aggregated and looking at, say, the top 20. I think we look at the top 20 sort of ports of entry on a value basis. And certainly, obviously, you think of your major real estate markets in the U.S., those states and those sort of ports of entry are really, really where we're seeing the volume coming in. So it's definitely, if you're kind of interested in that level of data, that's something you can certainly check out and study.
Good. Next, further to the low-cost positions among some of the Europeans, could you give us some details generally behind those low-cost advantages? You mentioned the beetle kill and freight, I'm sure, is part of that.
Yeah, so it's multifaceted, right? So I mean, when we do this kind of analysis, obviously we look at sort of production costs on a local basis, so in local currency, and so we look at the wood costs, which is obviously 60-70% of production costs for a lot of sort of lumber production, and whether you look at North America or you look at for European suppliers. So that's really the baseline of where the low cost position is coming in for looking at European suppliers. But then on top of that, when you control for exchange rates, right? Because when we look at production costs, we want to look at it on a like basis. The other factor that at play as well, and we analyze this historically, and we look at this in a forecast perspective as well. Obviously the dollar has been kind of strong relative to the euro and the Swedish krona as well. And that, compared to sort of historical levels. And so when you control for that as well, that is a contributing factor as well when you look at, cash costs on a dollar for dollar basis. And lastly, Chris, you mentioned delivery costs. In a lot of cases, particularly you think about the markets where that are long sort of distances for Western SPF producers to ship to. You think about the Northeast or maybe the Mid-Atlantic. Those are cases where production costs for European suppliers, the shipping costs are more advantageous. And so that's definitely a key factor that we look at. And the last thing I'll mention too is the duties on Canadian sort of imports as well. That's a critical part of the analysis that we look at. It's something that we do anyway in our sort of typical North American forecast analysis. But we also use that for comparative purposes when we look at sort of European supply. And so that is creating sort of a bit of a almost pricing umbrella that is helping European suppliers being in that lower second quartile position, give or take, in the market. So that's critically important. And of course, the changes in the duties on Canadian supply that we're expecting, I guess, to the end of September now, will be impactful as well. And that's something that we kind of look at in the study. And take all that as well as sort of the impacts of COVID-19, all these considerations into the analysis.
Good. Next question comes: how much further can European imports into the U.S. increase? And I think that folds directly back to the substitution question that we're asking our brothers at Random Lengths to consider. How do these imports, how might be the upward capacity of import growth? And if you have any thoughts on it, Dustin, what about substitution?
Yeah, I mean, certainly, I guess to kind of put it at a high level, there's certainly tailwinds for European suppliers over the next few years, right? Again, and really this spruce beetle kill in Central Europe is kind of front and center of those reasons. It doesn't look like that's this looks like this is a multi-year problem, at least 5 years, talking with our colleague John North about this, who covers a lot of does a lot of international timber analysis. Depending who you talk to too, some think it's more of a decade-long issue. So, this competitive cost position is going to continue to be sort of present, at least for the next few years, right? And, in a lot of ways, the U.S. market has kind of been more recently, sort of the least worst sort of place to sort of ship your volume, especially you look at, Asia weakened somewhat in 2019. And, there's just a lot of, the global market for lumber is pretty well supplied right now, especially in the wake of COVID-19. But even prior to that, there's a lot of sort of lumber that needs to find a home, and particularly out of Central Europe, it's having a disruptive effect between the logs and the converted product coming out of there. So, I think at a high level, we definitely think there's more, there's continued tailwinds for European suppliers in the next few years. Some of that will kind of be a little bit, stunted as duties are lowered for Canadian suppliers. But, as you mentioned, Chris, over the long term, Western SPFs can continue to decline. And there's going to continue to be this void that needs to be filled. And some, a lot of that obviously will come from the South, but, European suppliers as well will be, part of that mix, you got to think.
All right. And with just time enough for a couple of quick questions, Dustin, you may have touched on this, but if you might elaborate a bit, what are some of the recent thoughts on the ongoing U.S.-Canada softwood lumber trade dispute?
Yeah, I mean, certainly it feels like there's, there's more time to be had here before there's any sort of agreement, right? It does, I think my latest observation is it certainly feels like, the recent Department of Commerce, determination to sort of lower sort of duties to an 8% level puts more pressure, I guess, on the U.S. side of the border, than previous, when we were at a 20% level, which is, both are still very impactful for Canadian producers, but getting, those duties cut in half is, definitely changes things quite a bit competitively when you look at the relative cost positions of Canadian suppliers versus, say, suppliers in the U.S. and the Pacific Northwest. So, I think there's probably going to be more back and forth. There's going to be more sort of, we've got more time here before I think the industry comes back to the table. But I think there's a lot of uncertainty, and I don't pretend to have any sort of insider knowledge on where things are going to go there. But I think we've probably got more time ahead of us before parties come back to the table and make a sort of a future sort of softwood lumber agreement. Good.
Final question, and there are several quality unanswered questions that we'll get back to you over coming days. But the final question, Dustin, and please offer a quick definition, but what about the growth of mass timber in the U.S. and how that interplays with imports, if at all?
Yeah, it's a good question. I mean, it'd probably be something that's better suited for my colleague, Steve Honeyman, who really does a lot of the engineered wood and sort of mass timber analysis. It's not something that I've looked at closely. So, I think what I would say is probably punt that over to Steve Honeyman. It's certainly obviously an area of interest in the North American market. You're seeing a lot of growth, but from a small base. And not as sort of a developed market as we've seen in, say, a place like Europe, but certainly potential, in terms of logistics of imports for mass timber. I would definitely want to sort of talk to Steve Honeyman more about that, and so we can certainly kick that question over to him.
Good. Well, that takes us to the end of our allotted time. Thanks to Dustin and all of the attendees. I have a quick final couple of comments. Thanks to our sponsors, Farm Credit, and we'll have more from Dustin as well as our other RISI economists and outside experts at our upcoming Forest Investments Conference, June 8, 9, and 10, half days in the mornings. And so join us there for more on this in the broad wood products and timber review. And that wraps us up. So thanks for all, and thanks to you, Dustin.
Great, my pleasure. Thanks all.